Hello, everyone, and welcome to today's Forex session. Thank you very much for taking time out of your very busy days to come and join us here. That's me, Anna, and my husband, David. I know I can see some people here who know us very well, and I can also see some people who maybe this is the first time that you've come to one of these sessions. But before we start the session, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, I'm just going to start first and just quickly run through what the kind of narrative is for today. And really, there's only been one story, and that is the RBA, the Bank of Australia's interest rate decision. And what we can see here, excuse me, on both the CSI, the matrix, and over here on the Dixie, it had a pretty strong impact on the movement of the Aussie dollar, but also the New Zealand dollar, because the Aussie and the New Zealand, they tend to move in tandem anyway. Not had the same effect on the Canadian. These are the three commodity currencies that do actually kind of move as a little trio, but on this occasion it hasn't. And I just want to go through that because it's going to give you the background of what you see on your chart at the moment. Those of you who came along last time will know we talked about session crossovers, and we talk about session crossovers and the dangers that the traps that can be set at these particular times. This, in case you don't know, a session crossover is when another financial center joins the 24-hour Forex trading day or is coming to an end. And it's that period between either ending or joining, as it were. And what we have at the moment, we've obviously got Europe underway and London, and now we're waiting for New York, which is about 1:30. And then, of course, we have the Wall Street Open at 2:30. What happens is obviously this is a 24-hour market. It's not, there's no consistency of participation over that 24-hour period because, as I said, you have in Asia Pacific, yes, you have different centers, but in terms of participation, it is much smaller than the participation that we're going to have now, which with North America, Europe, and London. But as traders, obviously, we can't be at our desks 24 hours a day. We join usually just before a new session begins. Sometimes we come midway through. So what has happened is clearly going to impact what may or may not happen in the future. Now, last week we looked at the euro dollar and we had a really nice move lower. And what happened was we were waiting for really New York to get underway and whether that was going to continue higher, or do we see a reversal because it was very, very oversold. And that's really what happens at these crossovers. If you've had a very strong move, there's only two questions. First of all, is the move going to continue, or are we going to see a strong reversal? And to be honest, it could be either. And the factors that are going to determine that, they're going to be technical factors on the chart. We can see here, this is on the CSI. This is the hourly, this is the This is the hourly CSI. I like to use the hour because you've got a really nice snapshot of what's been happening, and you can put it into context over a couple of days. Yesterday, obviously, nothing was going anywhere because it was Labour Day in the States. So there was a bit of a move in London, and then by the time, then it just all kind of petered out, which is what you tend to see happen. Clearly, we have had a very strong move higher in the Australian in the US dollar, and we can see here. So from a technical perspective, we are looking at overbought and oversold. So the argument is right. Well, we're seeing that it is so overbought, oversold. Now, depending on your time frame, of course, if you are on the faster time frame charts, you would expect to see some kind of bounce. Are we going to actually see the bounce in the opposing currencies, the counterpart, which in this case is the Aussie or the Kiwi, or in fact, is the bounce if the dollar turns over going to be in one of the other currencies? Because as we say all the time, markets, currencies, instruments, they can stay overbought and oversold a lot longer. We've had occasions that we've seen on the CSI where this line is overbought and it just flatlines. It keeps going on, and you think, when is this wretched thing going to roll over? Well, everything rolls over eventually. The Forex market being mean reverting is probably happens more than most, which is why it is so attractive as a trading market, because you do get these opportunities to trade both to the long side and the short side. There are many more. What I'm trying to say is there are many more trading opportunities. Stocks, they do have a bias to the upside, because if you buy a stock, do you really buy it on hoping that it's going to turn lower? Of course not. So there's always this bias, if you like, to looking for things that are going to go up. Doesn't mean stocks don't go down, but it's just a different market. So this is from a technical point of view. Is there going to be a technical reason for certainly a reversal in the USD and maybe a bounce in either the Aussie or the New Zealand? Looking over at the matrix here, these numbers have changed quite a bit, actually. At one point, the Aussie dollar was the weakest, and the figure there was, I think it was just under 100. Now, from knowing this indicator and understanding it, that is a pretty strong move. The bigger the number, then the more, the bigger the move, as it were. Yesterday, these numbers were sort of in single figures, so that tells us that nothing was going anywhere. And if we look in the middle here, we've got the pound Aussie at plus 3.73. Yes, it's trickling higher, but it isn't going anywhere at the moment. Then we look at staying with the technical picture, thinking, well, maybe is this an opportunity to take a reversal trade, rather than maybe it's going to be a continuation of what we've had so far. We look at the Dixie, and here I've got the daily chart for the Dixie, and what's striking is that the index has stopped at the third Camarilla level. Those of you who have this indicator or who use Camarilla will know that the third and the fourth, whether the R4, the R3, or the S3 and the S4, they are key levels where price can stop, can move sideways, can retest and either reverse, or it will move higher. So we could be seeing a situation where, from a technical point of view, nothing is going to happen. So that's the technical picture, and that's even without going to have a look at the individual chart. I'm going to have a look at the chart of the Aussie dollar in particular, because I want to bring in the narrative for the RBA. There's a lot going on with that decision to hold interest rates, and there's some stuff about China in that I want to bring in as well. What the CSI tells us, in case you're not aware of it, or you don't use a currency strength, we call it a currency strength indicator, but it's really a currency flow indicator, because what these lines tell us is the strength of flow into a particular currency. So we know that the dollar has been bought quite strongly. We know the Aussie and the Kiwi has been sold quite heavily. So we can have a quick visual picture of an individual currency, and then we go and look at the pairs, which pair, what can we marry up with what to give us the possibility of a trade. And what we're looking for is, we're always looking for these strong divergences, as we can see here, the dollar buying and strong selling. You couldn't hope for a better signal, if you like. And then we go and explore the charts in more detail. Now, obviously, when they get to this position where overbought or oversold, mean reversion is a bit like it's been stretched, it's like an elastic band. It's then going to snap back. Depending on your time frame that you trade, if you are a very, very fast trader on a sniper or a scalper, so you're on the seconds or on the minutes, you might think, great, that's what I want to see. But I'm actually going to take a trade to this is going to reverse, and I'm going to take an opportunity for a reversal. If you're on a slightly slower time frame, it's a different question. It's a different question in the sense that, as I said, this could stay overbought and oversold. And here you would probably go up to another time frame, which is the 4-hour, and just see what's going on. And the 4-hour, we can see these currencies have only really started moving strongly. So you could say, well, actually, with New York coming on board, let's see what's happening. Let's have a look at the calendar today, and let's see whether, in fact, there is an opportunity for this maybe to be a continuation. As I said, it could really go either way, and that's what you must also be aware of at what I call these session crossovers. You've had a narrative up to this point. What has driven that narrative, in this case, has been something that has happened in Asia, in the Asia Pacific session. And the question is that narrative going to continue? And sometimes it does. Or has that narrative now played out, and we're going to be looking at it from the perspective of a potential reversal? Then we go and have a look at what's happening on the economic calendar side. And this is where we all use, or many of us use, Forex Factory. And we can see, obviously, that's where the RBA, there's not been an awful lot of news. It's certainly not what's called Tier 1. We've had the final services PMI, which have, apart from the UK's services PMI, which has come in above expectation, everything has been pretty dire. For the PMI, it's really the flash one that the market tends to pay attention to. And given that we are moving into the US session, according to Forex Factory, there's not much going on, and you're saying, oh well, maybe this afternoon is going to be what we call a technical day. There's no fundamental news other than something unexpected happening, or there's a major earnings release from one of the leading US stocks. It could be a quiet day, but I would always suggest that you go over to Trading Economics, because that is a more complete calendar. And what is going to be coming up this afternoon is we've got factory orders, but we've also got some auctions, some treasury bill auctions. And look at the interest rates that these are paying. Look at the yield on these. And given that, although the bond market is very quiet at the moment, there's no volatility. In fact, if you came along to our stock trading and investing session last week, there's no volatility anywhere, which is, on the one hand, it's good. But on the other hand, the longer a market is without volatility, i.e. it becomes complacent, the more dangerous the market is to this sudden reversal. What's going to be interesting is what these are sold for and what the yield is going to be on. They're going to have to pay for people to take these bonds. And that is really going to have a direct impact on the US dollar. So we go back here, we've got the dollar, the index stopped at a key level. And I would suggest that, yes, by all means, if there's a technical opportunity to take a trade, certainly on a reversal basis, I would pay very much attention to what that yield is going to be. It's not necessarily the yield that is used more often for as a benchmark. That's the 10-year, but and certainly the spread between the two and the 10. But these very short-term bonds, given that they're paying more than last time over 5%, are sucking in an awful lot of money that would normally go to maybe riskier assets. Why would you buy stocks when you are guaranteed over 5% on a treasury bill? So this is the dynamic with bonds. When yields are high, they will suck in money from other assets. That will also have an impact on the US dollar. So that's really what to look for based on what has happened. Let's have a look at the Aussie dollar, and let's start with the daily chart. And this is on TradingView. Let's scrunch it right up so we see where we are at the moment. Are we at a longer term significant level? I've gone all the way back to December last year. Well, it's certainly not at its lowest point, as we can see here. It's currently being supported by the outermost band of the volume point of control. This is today's candle. Volume hasn't finished underneath it, but I don't know whether we're going to get an anomaly on that. But that's what we are seeing at the moment. Going down to the 30-minute chart, which I have here, what we have is a sort of picture of the performance for the pair. We can see here we had a failure there, we had a failure there, we have sort of this quite broad, a wide sideways movement. We've got support and resistance levels here that was holding. It did actually break through back to test, and in fact that is where the volume point of control is. That is the little yellow hatched line, a very important level on any chart. And in fact it's been in a downtrend since there. It's since spot 0.64, it's now down to 0.63, and we can see this. It's almost like a perfect waterfall. We had a little bit of pullback there, a little bit of sideways movement, and within those candles, you would have had the same conversation going through the different sessions until maybe you got this consolidation, and then down it went again. And what we're looking at is the news came out at our time. Let's have a look, because it's best to match it up with the actual time itself. Where was it? 5:30. Let's have a look. What happened at 5:30? 5:37. In fact, it's here. There it is. This is actually the news itself. So we had it was already falling ahead of the RBA decision. And if without the RBA decision, you were just looking at this from a technical perspective on the 30-minute chart, it's broken through this strong support level, and now it becomes a resistance level. We can see that it's already had it's tried to break through earlier, but it actually been pushed higher. But let's take, this is typical breakout trade. This was 2:30 UK time. So it was already moving lower. Then it went into a consolidation, it didn't do anything, which you would expect ahead of a major news release. And then we had the news release, and down it went. But in fact, if we look at that candle there, if I just expand it, there we are. This is the actual release itself. It was a hold. If you want to read my little background on it, if you go over to my Facebook Forex page, I did highlight this. I said the consensus was for a hold. So it's staying what it is. But then we have the statement from the governor, who is actually, this is his last central bank meeting. He's resigning. He's not going to be there anymore. I don't know who the new one is yet. So we obviously had a lot of two-way price action there, going up, then going down, maybe some trap moves, and a volatility candle, and then it carried on lower. With a hold, you think, well, it's not good news, and it's not unexpected. So why did it carry on lower? And this is where you have to, if you are going to trade any currency, is Aussie being an example, whether it's against the dollar or in any of the cross pairs, you have to understand the characteristics of that currency, which involves understanding the import and export markets for Australia. And as we've always said, and it's repeated in our Forex trading program, Australia's main relationship is with China, which since COVID has been very, very fractious. I don't know if you recall, but I think a year within, I think in 2020, just after the pandemic, everything sort of shut down. Australia called for an investigation into origins and mentioned China. China retaliated. There were all sorts of tariffs imposed. I think to the extent now that Australia has lost a major export market in its wine. One of the things China has tried to do is try and find an alternative source of iron ore. I believe iron ore is the biggest exporter to China from Australia. The quality of Australian iron ore is very good. It also exports copper. Copper is going to be massively important as we move to a different world with renewable energies. It's still going to be very much in demand. And the Chinese, I think, have gone off and found copper elsewhere, primarily in South America. So it's, if you like, it's the political background to the economic relationship. What's also important to understand about the Aussie and the dollar is, as you know, commodities are priced in dollars, but you will have read about the Chinese attempt to widen the BRICS, a loose collection of countries that really want to get away from the dollar for trade and for pricing. And I believe for iron ore, I think Australia agreed to be settled in the yuan. Now you might say, well, yep, that's fine. Why does the dollar still count? Well, the dollar still counts in the sense of pricing, but also to get to that yuan, you might have to go through the dollar anyway. So the exchange rate to watch for anything to do with the economics in terms of the commodities, because Australia is a big commodity exporter, is in fact the Aussie dollar. But be aware that on the there's a third wheel, if you like, to this relationship, and that is what is going on with the yuan. And also be aware that the dollar is a free floating currency. It's allowed to do what the market wants it to do. The yuan is pegged to the dollar. Currencies that are pegged to the dollar, when the dollar's weak, that's fine because the native currency is weak. But when the dollar strengthens, it causes all sorts of problems. A strong dollar causes problems for any country that has to import a lot of food, a lot of energy, because everything is tied to the dollar. You may not like it. It may change, but that's where we are at the moment. So you've got all this in the background. Clearly, there's also been problems with China, in the sense that, not problems with China, the Chinese economy hasn't rebounded as strongly as anticipated. There are all sorts of issues with their real estate market. So there's an awful lot going on there. China regularly goes in and tries to weaken the yuan, because it, as I said, it tries to control the peg, as it were. And those of you who have our program or have heard us on these sessions or have read what we've written will know when central banks try and intervene in the currency markets to weaken their currencies, normally it's usually pretty disastrous. We only have to think of the Swiss National Bank. So behind this very straightforward move, consolidation before a main news release, then a move lower. Bit of a rebound this morning in the London session on a technical rebound, because everything was so overbought and oversold. Traders thought, oh great, well it's fallen that much, it's bound to go up. Well, it probably did go up, but in fact it's just moved sideways, and now it's had another leg lower, and we are now moving into a consolidation as we wait for the New York session. So behind that move, there is an awful lot going on. There's a macro picture, there's a political picture, there's the technical picture. And even though you may only trade a very fast time frame, such as the 5-minute chart, which is absolutely fine, you still have to be aware of when one of those factors is likely to impact the currency, either because of an announcement that's coming ahead, and you may decide, well, actually, I'm going to sit this one out, or at least wait until just to see what happens. So anyone that says to you, oh, I'm only a technical trader, everything you want to know is in the charts, just ask them, well, do you trade through non-farm payroll? Do you trade through this? And they say, oh, no, well, I wait till non-farm payroll waits. Well, if everything is in the charts, why don't you just trade? Why don't you see where the chart? No. Then it's a question of what news is more important. What is the market going to be paying attention to? But for the Aussie, you have this additional layer of politics and macro as well, all tied to the relationship with China, the products that are actually exported and being commodities. That's why the currency, the Aussie, will either be weak or strong, because if you have a high interest rate, your currency is perceived as strong, and you will have flows into that on the bond side because you're going to be paying a good yield. But when it starts to weaken, that's good for Australia's exports, but may not be necessarily, if it's priced in dollars, if your client or customer has got to pay in dollars, maybe not so much, because you've got to find more dollars to make up for the Aussie. Looking at the move that we see here, this is on the Renko on MT4. The Renko is actually a great chart to have, because you can see the consolidations. You've got the little pullbacks here. This is the little move earlier on that we had in the London session and just after. But what it's actually telling you at the moment is really there doesn't seem to show the desire for a reversal at the moment, and it's all quite quiet. It's moving quite slowly because Renko is not based on time. It's based on the pip value of one of those bricks. When the market is moving fast, those bricks they come out very fast. So that piece of price action there, it sometimes can take hours. Sometimes it could take minutes. It depends how fast the market is moving, which is why the Renko is so good in giving you an insight into the momentum within the market, and also helping to keep you in, particularly if you have the indicators that we have here. This is the trend dot. This is the trend monitor. It's all bright red. We've had a little bit of a blue, but nothing has happened so far. And we always use it in conjunction with the 5-minute chart, as we can see here. And this is what I mean. So in fact, the volume point of control is here. On the time chart here, would there have been an opportunity to take a trade? I don't know. It really depends on how long you think you're going to stay in a trade. This is the break lower on a volatile candle. We're down at this support level. We've gone through every single Camarilla level. As you see here, we've got 6 on this time frame up to, not including the hour. They are refreshed every 24 hours. So in a sense, they are almost now irrelevant unless we get a reversal all the way back to the S6, which is why we look at the hourly chart, because the levels on the hourly chart are there until the end of this week. So from a technical perspective, are we going to see maybe a double bottom? We've got quite a lot of volume underneath that little candle here. It all depends. Personally, I would wait to see what the Renko chart does on the hourly, just to get a feel for the levels. We've actually gone through the 3, we've gone through the 4. As I said, it does look very, very bearish. Where is the next logical step? Well, you've got the 5. Not as important, if you like, in hierarchical terms as 3 and 4, but certainly one to consider. And for a re-entry, in terms of, well, I've missed all that because I wasn't up at 3 o'clock in the morning, and I've missed London. I'm really only do New York. What do I do? And we have a really nice little example. If we take this as our primary trend, we have a little pullback here. we look at the volume. And this is the power of volume, particularly if you are looking for entry into a continuation of a primary trend. Because all trends, all moves, they do pull back, they do correct, they do attempt to rally. And you think, oh, well, maybe that's, that's it. This is the conversation that goes in the head of a lot of traders. They see this, nice big move, considering all this consolidation that you've had to put up with in the last however many sessions since the end of August. Suddenly, you get this lovely move lower, and okay, the volume is what it is because it was in the Asia Pacific session. You've got big candles, and suddenly you see a little candle here. It looks like a little hammer candle, and hammer candles are very, very powerful. You've actually had buying on the previous one and buying there, so you would be looking for a potential reversal as a signal. Some traders go off that, and you're at the S, but be aware. It's gone below the S4 where you think, okay, maybe that's going to reverse just off what the candles are telling you. And they do, it does go. But look at the volume, that's the one there, that's lower, and it goes straight back into the S4. So your reversals, you've got VPA and you've got your levels, in this case, the Camarilla, to actually confirm to you whether in fact the move is going to continue. It didn't continue. It's not a reversal. It didn't reverse high. It has actually continued lower. So that. You could either use that if you were in it already. You could decide to come out there. That's fine. You said, fine, I'm coming out there. If you were looking for a reversal, that was not going to play out, and it wasn't going to play out. First of all, from a VPA perspective, the VPA perspective being the volume, but also the fact that it ran straight into the S4, which I said earlier, along with the S3, the price does tend to pause there, sometimes and sometimes reverse. Went straight through on the S3, but then that was during the momentum at the time of the news. Levels tend to get taken out quite strongly if the price approaches them when there is a key piece of news. And we look over here and we look at the CSI, and the dollar looks like it's, I'm not saying it necessarily climbing, but it's still there. We'd look at the dollar index, and the Aussie has kind of slowed down a bit. So here I would say, well, let's go and look at the New Zealand dollar, because these two currencies have had an enormous fall. And in fact, looking at the matrix, we've got the pound. We've also got, maybe something has cropped up in euro dollar. Didn't do too much this morning. This is what I'm saying. This pair may be done for the day. The reversal's not going to go very far, and you want to go and find, you want to go and take advantage of maybe the dollar carrying on higher. Maybe the time is to go and look at one of the other majors. Right. That's all I want to say on that. If you've got any questions on what I've said or what David says, then please just put them into the chat box, and I'll pass over to you, David. Is that all right?